Welcome to the Explainer. Today, we are tackling an absolute beast of a topic, but we're going to do it incredibly fast. If you run a business or manage a team in the Golden State, you already know the legal landscape is basically constantly shifting. So we're bringing you the California Payroll Law 2026, the sub 5-minute survival guide. We're going to blast right through this, skipping all that dense legalese, and give you the exact rapid-fire breakdown you need to navigate these complex labor laws without breaking a sweat. So ask yourself, are your California payroll practices completely compliant? I know, it's a high-stakes question, because here's the thing about California. Making a simple administrative mistake doesn't just get you a slap on the wrist. Oh no, it sets off a literal liability trap where penalties can multiply at a terrifying rate. So to keep your business safe and your operations bulletproof, we're diving straight into the 4 main pillars of compliance. All right, let's jump right in with Pillar 1, wages and overtime rules, the absolute foundation of employee compensation. Right out of the gate, as of January 1st, 2026, $16.90 an hour is the standard minimum wage for all hours worked in California. And here's the kicker, that applies regardless of your company's size. But you absolutely have to be careful here because there are some massive exceptions. For example, covered fast food workers, they've had a $20 an hour minimum since way back in April 2024. Certain healthcare workers also have their own higher minimum wage requirements that kicked in late in 2024. So always double check your specific industry. But for your standard baseline, you're looking at $16.90. Now, California doesn't just care about weekly hours. They care deeply about the daily grind. You owe time and a half, meaning 1 and 1.5 times the regular rate if an employee works over 8 and up to 12 hours in a single workday, or for the first 8 hours on their 7th consecutive day of work in a week. But the second they cross that 12-hour mark in a single day, or work more than 8 hours on that 7th day, boom, you hit double time. Double their regular rate of pay. Just keep in mind, there are some specific exemptions for certain classifications of employees, but for the most part, this is your standard operational playbook. Moving right along, let's look at Pillar 2, unemployment and FUTA taxes. We're shifting focus to the financial back end here. Now, what's really wild is the story behind this specific number, $147. See, employers pay FUTA taxes, the Federal Unemployment Tax Act. Normally, federal law gives employers a nice 5.4% tax credit. But California has a massive outstanding federal loan balance. The state started borrowing heavily back in June 2020 during the COVID crisis, and that loan balance is expected to hit about $21.3 billion by the end of 2027. Because of that massive debt, the federal credit for California employers is being slashed to 3.9% for the 2026 tax year. So what does that actually mean for you? It means you're effectively paying a higher FUTA tax of 2.1% on the first $7,000 of wages. Do the math, and that is exactly $147 per employee for the year. It's a sneaky, direct back-end cost increase you have to plan for. Okay, let's pivot briskly to daily operational compliance with Pillar 3, meal and rest breaks. I need you to pay close attention to this one, because breaks are exactly where penalties can multiply on a daily basis. There's a very strict, clear contrast between meal breaks and rest breaks. For meal breaks, if an employee works more than 5 hours, they're entitled to a 30-minute completely unpaid meal break. And listen to this, it absolutely must start before the end of their 5th hour of work. If the shift goes over 12 hours, a second 30-minute unpaid break is mandatory. Now, rest breaks are a whole different story. These are paid, uninterrupted 10-minute breaks required for every 4 hours worked or major fraction thereof. So a standard 6 to 10-hour shift, that usually means 2 paid rest breaks. Remember the golden rule, unpaid for the 30-minute meal, paid for the 10-minute rest. So, the multi-million-dollar question, what happens if you miss one? Well, a missed break premium equals exactly 1 hour of pay. If you fail to provide a compliant meal or rest break, even if you just ask them to work through it without a signed waiver, you owe them a premium of 1 hour of pay. And note, this isn't just their base hourly rate. This is at their regular rate of pay, which legally must include all forms of wages. Oh, and trust me, it gets worse. You can actually get hit with double penalties in a single day. An employee can receive a maximum of 2 premium pay hours per workday if both types of breaks are violated. So that's 1 hour of premium pay for missing the meal break, plus another hour for missing the rest break on the exact same day. Honestly, if your scheduling software isn't perfectly tracking this minute by minute, your payroll costs could be quietly skyrocketing right under your nose. All right, let's move to our final section, Pillar 4, separation pay and penalties. We're going to see how all this builds into the final act of employment. Termination rules in California are, frankly, incredibly unforgiving. The law dictates exactly when you must hand over that final paycheck, and it depends entirely on how the employee leaves. Scenario 1. 0 hours. If you fire or lay off an employee, their wages are due immediately. No exceptions. Scenario 2. Also 0 hours. If they resign and give you at least 72 hours notice, they must be paid on their final day. Scenario 3. 72 hours. If they resign out of nowhere with short notice, you have exactly 72 hours to pay them. They can even demand you mail it to a specific address. There is absolutely no waiting until the next standard payroll cycle. Which brings us to our final, somewhat devastating point. If an employer intentionally fails to pay those final wages within that incredibly strict timeline we just mapped out, you trigger what are known as waiting time penalties. Under California Labor Code Section 203, this penalty equals the employee's daily rate of pay for every single day the wages remain unpaid, up to a maximum of 30 days. Let that sink in for a second. One late final paycheck can cost your business a full month's worth of wages in pure penalties. So, as we wrap up this rapid-fire explainer, I want to leave you with this thought. Is your company's offboarding process truly bulletproof, or is a 30-day penalty ticking away right now? Review your processes, understand these 4 pillars, and above all, stay compliant.